Hi, welcome to the Kyoto Finance channel. I'm your go-to buddy for investing in US stocks. If you are dreaming of building wealth through ETFs and chilling with financial freedom, you are in the right place. In our last few episodes, we talked about Buffett's investing style and the classic 60 stocks, 40 bonds portfolio. Here's the deal. The more stocks you hold, the wilder the right gets. So, is there a portfolio out there that gives you steady returns with low ups and downs? Today, we are diving into one of my all-time favorite ETF combos, Harry Browne's Permanent Portfolio. Here are the 3 big takeaways for this episode. The first, Harry Browne's legendary investing story. He totally called the gold boom. The second, the logic behind the permanent portfolio's asset mix, ready for any economic storm. The third, I'm sharing the ETF course with you. That is VTI, TLT, GLD, and BIL. Build it yourself. First, let's take a quick look at Harry Browne's epic life. He was a famous American investor, a libertarian politician, and an economic commentator. He wrote best-selling books and even ran for president with the Libertarian Party. Okay, he only got 0.9% of the vote, but his investing game, top-notch. Back in the 1970s, he predicted the collapse of the Bretton Woods system, saying the dollar would break free from gold. In his book, How You Can Profit from the Coming Devaluation, he warned that central banks would print money like crazy, and gold prices would skyrocket. Guess what? He was spot on. After the US detached the gold standard in 1970, gold shot up from $35 an ounce to over $800 by 1980. That bold call made him a legend, and his returns went through the roof. But here's the thing, the good times didn't last. In the early 80s, the Fed hiked rates, and the gold bubble popped. Harry realized betting big on one asset was too risky. He needed a strategy that could weather any market cycle. That is when he came up with a permanent portfolio. The goal? Keep your money safe and growing, no matter what the economic throws at you. So, let's break down the core of the permanent portfolio. The magic of this portfolio is simple. No matter how the economic shifts, something in your portfolio will shine. Harry's plan was to split your money evenly across 4 asset types, each getting 25%. The first, stocks. These do great when the economy is booming. Second, long-term Treasury bonds. These protect you during recessions and deflation. The third, gold. Perfect for fighting inflation and global uncertainty. The fourth, short-term treasuries or cash. Keeps things liquid and stable. This setup means you don't have to play the market guessing game. It's all about spreading risk to handle whatever comes. So, the allocation is 25% VTI, 25% GLD, 25% TLT, and 25% BIL. How is it performed? Let's check it out. Here's the data. From 1968 to 2025, that's 58 years. This portfolio delivered an annualized return of 8.33%, with a max drawdown of just 19.67%. Compared to going all in on stocks, this keeps the swings super manageable. Its strength isn't about topping the charts every year. It's about never letting you crash and burn. You can hold it and sleep easy, while your wealth compounds over time. Bottom line, Harry Browne's Permanent Portfolio is like the ultimate stabilizer for investors. For newbies, it's a very free way to invest. For long-term players, it's a rock-solid tool for growing and protecting wealth. Don't forget, I've got those ETF codes ready for you. 25% VTI, 25% GLD, 25% TLT, and 25% BIL. Copy, paste, and build it yourself. Financial freedom is a breeze. Next episode, we'll dive into a detailed backtest and ways to tweak this portfolio. If you are into low-risk, steady return strategies, you won't want to miss it. Drop a comment and let me know, out of these 4 assets, which one would you overweight? Catch you in the comments. If you enjoyed this episode, hit that like, subscribe, and share button. Your support keeps us going strong.